Good morning. Good morning, everybody. Thanks for attending this. This session is called, Is Your Company's Buyer in Asia? Most likely it is, and we'll go through the reasons why and some of the experience that we've had at Corum in terms of selling game companies into China. My name is Jim Perkins. I have been in the game industry for about 30 years. I started out starting my own company, working as a publisher and publishing a lot of the initial shareware games, which were essentially the first free-to-play games with id Software and Apogee and Epic, with Unreal and Wolfenstein and Duke Nukem and Doom and Quake and all those products. I actually sold a couple of companies in the gaming business and am now helping other gaming companies sell their companies to larger companies in the game business. So a little bit about Corum. We have a global presence. We're headquartered in Seattle, Washington. Our European headquarters are in Zurich, Switzerland. We have offices around the world working with people to help with mergers and acquisitions. We also have a very large research group that every day tracks all the deals that are happening in M&A, specifically in the gaming industry, and all the buyers and who the buyers are and what their preference is in terms of buying. Just a bit about our process. We do run an optimal outcome process. So we're interested in making sure that there is a successful sale of your company. We only represent sellers of companies, although we have a huge database of buyers worldwide. And we only work with we only have senior deal makers, so we don't have any junior people that are just learning the business. We have people that are working and have sold their businesses before in the industries that they specialize in. Here are some of the deals that we've done recently. You may have read about Punters. It's an Australian game publishing company, actually in the betting business in Australia. We sold that to News Corp. I was directly involved in the sale of Jagex to Zhongji in China. And last year, and then finishing up the deal this year, was working with Digital Extremes in London, Ontario, Canada, to sell that to Leyou and Perfect World. And by the way, following this session, we have a panel of really great buyers from Perfect World, CB Capital, and Yuzu. So I encourage you to join us at about 10:30 or 11 o'clock for that panel. So those are some of the recent deals we've done. I'll get into more details on that in a little bit. But here's some interesting buyer data and seller data in Asia. The growth in sellers and buyers over the last couple of years has been huge. Sellers has gone up 40%, buyers 55%. And I'm going to get into some detail on who those buyers are. But the growth really is faster than pretty much any other area in the world. It used to be that North America was the leader, but now it's definitely in Asia, and particularly in China. A few facts about the Chinese market. The Chinese public market volatility is very high, especially last summer. When we were in the midst of doing a few deals with the Chinese, the public markets were going up and down constantly. And it's almost terrifying when you're in the middle of a deal, if you've got a public company on the Shanghai Exchange or the Shenzhen Exchange or the Hong Kong Exchange, to watch these markets fluctuate. And many deals did not get done as a result of that fluctuation. The other thing to watch when you're dealing with a Chinese buyer is the exchange rate volatility. It's pretty dramatic, and it's been going down compared to the US dollar since 2014. There's also rumors of the Chinese government altering that exchange rate or devaluing their exchange rate. It's all rumors, but it can affect deals at any time. This is a great chart. It really shows, you can see that in the last couple of years, the gray part or the blue part maybe on the screen is the old economy. So those were companies that are buying into natural resources in Australia, in Canada, South Africa. That's the old economy. The new economy is the orange section, and it's huge. The growth in M&A deals, overseas deals, has grown dramatically. And that is part of the new economy. So that is technology. That's entertainment. All of that is driving our business, and in particularly the game business, because of the deals that I'll show you in a minute. And also Chinese investors are going global. So you'll see a lot of Chinese investment firms investing in North America and Europe, and you also see a huge number of investment firms from North America and Europe moving into China. So there's a great exchange there, and as Ronaldo said, there's a huge amount of activity. These companies know exactly what they're doing. They're looking at taking a considerable portion or acquiring a considerable portion of the highest value companies in North America and in Europe and other parts of the world. So this is happening now, and it's dramatic, especially over the last couple of years. The top buyers in China, Tencent was mentioned before. Qiu360 is making a lot of acquisitions. HNA, they're in the business of buying hotel chains. I believe they bought about 25% of Hilton. Recognize Lenovo and Alibaba and so on. Most of these companies, except for maybe HNA, are technology companies. They're looking to buy technology, software, intellectual property, and so on. Those are the top buyers in China. And then the top technology buyers of non-Asian targets, meaning that these Chinese buyers are buying companies outside of China. Again, Tencent at the top of the list, Lenovo, Giant, and so on. Huge buyers, making billions of dollars of investments in various companies, especially in entertainment and gaming. This is just a short snapshot of what's going on in terms of the deal size that they're looking at. You can see that, and this is from 2014 to 2016, most of the deals that they're interested in and are doing are in the $25 to $100 million range, and up. There are some mega deals over the $1 billion mark, but you can see that they're interested in larger deals. Very important to note. Again, and this is non-Asian targets. Again, it's $25 to $100 million and $100 million to $500 million is the sweet spot for these Chinese acquirers. Let's take another look at it. These are acquisitions by transaction size, and so the first bar on there is 2014, and then 2015 is the lighter gray or blue chart, and then projected for 2016. Again, it's projected that the most deals that will happen are in the $25 to $100 million range. We see some drop in the middle range, but then in the $500 to $1 billion range and $1 billion up, the number of transactions is increasing dramatically. Again, for non-Asian targets, these are, again, Chinese companies buying outside of China. These are the numbers, dramatic increases in $25 to $100 million range and up. They're looking for the largest possible deals. They're looking for profitable, successful companies. So the larger, the better for them. So some of the deals that we've seen in the past, and this is just a summary of probably 5 or 6 of the major deals that have happened in the last couple of years. We saw Miniclip go to Tencent. Miniclip was out of Switzerland, going to Tencent in China. Supercell was mentioned by Ronaldo before. A very large deal, 3.7 times revenue of Supercell sold to Tencent. Playtika sold to a Chinese consortium. It was actually sold to Caesars, and then it was sold to a Chinese consortium for $4.4 billion. Shanda Games, again, sold to a Chinese holding company. And China Mobile is being sold to Pegasus for about $689 million. So you can see the size of these deals are pretty significant. And then we get into some of the deals that I was directly involved in and facilitated. Digital Extremes, the enterprise value is reported to be $120 million plus, and that was sold to Perfect World and Leyou. Now, Leyou wasn't even in the game business. They were a chicken manufacturer and chicken distribution company, believe it or not, and now they're in the gaming business and have changed into the gaming business as a result of the multiples that they can get on the Hong Kong Stock Exchange and other companies that can get to multiples on Chinese exchanges for gaming companies versus traditional businesses. So Digital Extremes was a very successful transaction for Leyou and Perfect World. Then we had Jagex that was just done this summer to Zhongji. Zhongji was not in the game business before at all. Tried to get into the game business a few times. That deal was reportedly worth $300 million. I was involved in that deal as well. Very interesting deal. Jagex has the extremely popular franchise called RuneScape. And obviously there's as Ronaldo said again, these companies are interested in brands. They're interested in how they can grow these brands that Digital Extremes or Jagex or all these other companies have into the Chinese market. But they're also really interested in the high profitability of these companies in the West and want to grow in the West as well. And then Amplitude out of France was sold to Sega just recently. Obviously, I think most of you know that in China and Asia, free-to-play is king. It's actually based on the old shareware model where we sold or gave away initial episodes or initial levels of games on CompuServe, and all the best games essentially won. You could try before you buy. Again, free-to-play model. It works really well, and if you're in that business, and you have to be in that business to understand the Chinese market. So with Activision, with Call of Duty Online, League of Legends, Tencent, Smilegate, a hugely successful game, Crossfire in the East, not in the West yet. So things to think about doing deals in China. There's a foreign investment catalog there that lists industry sectors in which international investors are permitted. There's a lot of approval and registration rights that need to go on. So deals that happen with China take a little longer. They take more approval. The Chinese government and the stock exchanges need to approve these deals. And they need to be now within specific ranges, acceptable ranges. What China is trying to do is at least control their stock market so there isn't the crazy volatility that there has been. There is merger control. There is national security review. There's always an antitrust concerns. And there's very sophisticated M&A mechanisms built into these Chinese buyers. So there's all of the processes for approval, audits, legal review, all of that is a little more complex than it is in some of the North American and European deals within North America and Europe. Also things to consider, as Ronaldo mentioned, is intellectual property rights. China is working very hard to enforce intellectual property rights. I've spoken at many conferences in Hong Kong and Beijing on these rights. They've got a lot of people trying to make sure that your rights are protected, whether they be patents or trademarks. But it's a very important thing to watch. Stock options, not a possibility. You're not allowed to hold stock in China. You can, through various mechanisms, do it on the Hong Kong Stock Exchange, but if you're outside, don't live in China, you're not Chinese resident, you cannot hold stocks in those companies. Also compliance, they're trying to cut down on corruption. There's a lot of regulations going on with regards to M&A and doing background checks on the people that they're buying or acquiring and making sure that these deals are all above board. And as I mentioned before, IP protection, the old ways are no more. I think there's obviously still a lot of that going on, but the government is really trying to crack down and establish a level of legitimacy in China to operate. And as mentioned before, China is tightening mobile games regulations. There are pre-approvals required to publish, and existing games need to get approval as well. Couple of things, high-level things to note is when you're doing a deal with a Chinese company, deal with senior executives. Deal with corporate development executives, CEOs, CFOs. The guy in charge of marketing, the guys in charge of product development are not the folks to be dealing with. at any company when you're doing any M&A, but especially in the Chinese companies when you're working with them. And obviously, from the data that you've seen so far, mobile gaming is a critical part of the gaming economy within China. Now, how do you reach and leverage Asian buyers? Well, first of all, understand their market. Go to conferences like Casual Connect. Understand what's going on in that business. Go to conferences in China and Korea, in Hong Kong or Korea, and understand those Asian markets. Get to know the people within those markets. Relationships are absolutely key to establishing and potentially doing a really good M&A deal. Network as much as possible, and also work with professionals and advisors, things like lawyers, accountants, and M&A people that have done deals already with Chinese and Asian buyers. They have to have that experience in order to get the deal done. Otherwise, many things can go wrong. So some closing thoughts before I entertain questions. Obviously, Asian buyers are increasingly active, particularly out of China and Korea. They're very, very active. They're leading the deal market. In my experience, they have outbid on every deal that we've worked on. They've outbid European and American and Canadian buyers every time. The deal size is increasing. As you saw, their preference is $25 million and up. It's more working into the $100 million and $500 million deals. They're looking at very large deals. And international M&A helps the Chinese buyers in particular make investments in stable markets. There are these companies within China and individuals and high net worth individuals that are looking to invest in other parts of the world, not only to bring your technology, your games into China, but also to help you and benefit from the growth that you have in your markets, whether they be in North America or Europe. They do offer risks. It has takes a lot more time sometimes to do the deal, but the rewards are significant. And I found in doing deals with Chinese buyers, and specifically Chinese buyers, that they are extremely great to work with, and post-deal, they do what they say they're going to do, and they will not interfere typically in the studio if they say they're not going to interfere. They're there to help you, which is quite a bit different sometimes from the 90s and 2000s when American publishers sometimes came in and tore apart game developer and game studios. These companies are interested in growing your studio. They're interested in helping you make a profit and growing together. So is your company's buyer in Asia? Very likely. Can I take questions?
Question for Jim, everyone.
Hello, my name is Sergey. The question is, as you said, Chinese buyers are interested in huge deals, like $10 million and higher. Mm-hmm. So for a big amount of developers, they are much lower in cost at the current stage. So there should be some starting point to grow for that minimal amount of evaluation.
Yeah.
To be interested, to be big enough for Asian buyers.
I wouldn't recommend it. From what I know, I would work on the market that you know best in the market. If you have a partner, and absolutely it's required that you do have a partner in China if you're going to move into the Chinese market, and you're going to plan on building a product for the Chinese market, is work with that partner to do that. Trying to guess what they want in that market is extremely difficult. So I'd first of all find a great Chinese partner that believes in your game and believes in your team, and then work from there if you plan on entering China first. But it is difficult. Ronaldo, you have something to add?
Yeah, I have a question. I agree. I mean, all the Chinese are looking for profitability to boost their numbers on the stock exchange. How long do you think that will last? Because it seems like a short-term strategy for them, right? They saw in gaming a very unusual market to boost their PE, right? And,
Yeah.
But how long do you think it will last? Because I don't see a long-term business on that one. I think it's a very short one, but I'm not sure.
It's hard to tell how long that will last, and that's one of my questions for my panel right after this. But right now, they're interested in that multiple on the stock exchange. If you're not, from my experience, if you're not generating positive EBITDA, they're really not going to take a hard look at you for an acquisition. They may be interested in publishing your games in China, and in that case, find the right partner that has a track record of publishing games in China and understands that it's just not a let's just flip the game into China and go from there. There's a development process that's required to make sure that that game is suitable for China or other Asian markets.
Jim, thank you very much.
Thank you.